Hello, everybody. Welcome back to another exciting episode of The Rational Investor. This is Julian reporting in and running from the mob behind me with all of my bearishness that I've had the past couple weeks. You guys know last week I was in a state of confusion. But the weeks before that, I was quite bearish on the market. I was cautious, but I had bearish wave counts and things like that. And I feel like this is now what is behind me. But I think that's most people. I think this is the public right now. And I think that's the reason why we are having such a hardcore squeeze. I don't think anything's changed significantly. Yes, inflation is coming down. And we actually have a special guest today who's going to talk about it. His name is 1075 on the site. Otherwise, his real name is Effie. He'll be doing a great little 10-minute presentation on why things kind of maybe took a turn and his thoughts to counter my, almost perma bearishness. We're gonna talk about how I feel in a second. Hopefully you guys enjoy this. You see, I fixed my green screen. Now I can have hands like this. There's nothing in the background. Anyway, okay, so that was fun. We're gonna get rid of the Simpsons and we're gonna shrink me down. We're gonna go through, of course, the dashboard to start. Then we're gonna get into talk about some events that happened this week, and then we're gonna look at the options market. And then I'm going to give my thoughts on the S&P. After that, Effie /1075 is going to give his thoughts, and then we'll go from there. All right, I'm going to shrink myself. How small do I want to be? All right, how small should I be, guys? This small? Is this small enough? Like that? Or should I be like this? Or should I be? What should I do? Look at this. This is fun. I kind of like having control. Normally Chris has control, but this time I have control of the whole streaming thing. I'll leave it like this. I'm gonna get into let's just go to the breath first. Okay, so breath. Lots of crazy signals lately. We had a cross down on, where's the actual breath I want to show? What the hell? Okay, so crypto and S&P. I wanted to show these. I'm gonna zoom in a little bit on my screen here. Oh, that doesn't work. Okay, can't do that. So crypto crossed down on the 15th. And if you notice that Bitcoin hasn't done much since then, it's kind of just oscillated in a range. We haven't had any higher lows. It's just been lower lows the whole time. You can see lower low, lower low. So that's crypto. Even the universe breath has not crossed back over. And I've found with these breath crosses, sometimes you do just get a pause. It can be just a pause, and then it could cross back over and take off. Or we could actually go into a bear. Now S&P is different. Look at what the S&P did. So full on bull all the way until January. What is that? January. Let me go to the other screen. Is there a bigger S&P here? Or is it bigger one? Here's a bigger one. So bull all the way until crossover on January 17th. So our S&P, essentially S&P trading algorithm we sort of have, would have sold on the 17th and exited. And it would still be out right now. But we had this little W here on the 27th, confirming on the 30th, essentially, a couple days ago on the 30th, and you would have went long on this W. You could have taken a long on W's if you want to trade the W's. We found that they're pretty successful. Generally on a W, it crosses back over the slow. This time it didn't. I think we would be in a short, but we would have been stopped out by now. But it's interesting to see that we have not crossed back over the slow. We've just pushed higher. So what I'm seeing here will help seg into what I want to talk about today, which is the market looks very, very bullish, but there's a lot of signs out there that tell me be cautious. Be cautious because we could get a very violent pullback before then we go higher. Either there's going to be a violent pullback and then higher, or a violent pullback for a while and then eventually higher, because the market's not going to sit and do anything. Nothing, right? I think I'm a little bit too big. I'm going to shrink myself more. Okay. Shrink. There you go. That's better. I think I don't need to be that big. Okay. So that's the dashboard. That's what it's kind of saying. I like that it lines up with what I'm thinking. Let's go to Forex Factory. Let's see if there's anything else coming out. Obviously, we had earnings this week from a lot of different companies. Some of them came in decent, and some of them came in very bad. But almost all of them rallied regardless. It didn't seem to matter. So in the short term, I think something we can take from this week is that earnings don't really matter, at least in the short term. It's more important to look at the market state and what is going on behind the scenes. Do we have any more events this week? Let's see. So Powell yesterday, obviously, was the big event. We did a live stream, and got a lot of nice commentary from Brian. Friday, we do have our non-farm employment change, unemployment rates, and services PMI. I know mine says 8:30 and 10, but this is going to be 8:30 a.m. on the East Coast, 10 a.m. on the East Coast. These are definitely going to be market movers. Non-farm especially is a big one. I think also services PMI is going to be a big one. So one of these could easily come out negative and cause a big reversal. And I'll show you where the market is setting up to possibly have that reversal. So first, let's look at calls and puts really quick. See what that's telling us. So we've got 410 calls and literally nothing after that. We have a put wall here at 395 and then nothing as far as calls. When you see something like this, when I see something like this in the option market where you have a huge amount of puts on the left-hand side, left, right, yeah. So big amount of puts on this side right here, and then like nothing on the call side, that means that the market will most likely rally. It can just push past that wall of calls and simply go higher. And that's what we've seen here, right? So we're all the way over here at 415 or something. Let's pull up our charts and see where we actually are. Let's go over here. Bring this over. Okay. Charts are up. We're going to go like this. I'm not going to do a full screen. I'm in control. So we're going to do whatever I want to do. And we're going to go like this. Go to a daily chart. So S&P 4174, which equates to on the SPY. Let's look at SPY. 4116. Okay. Why does it keep showing this? Wants me to do some kind of license agreement. Get rid of that. Okay. Sorry about that, guys. So 416, and we go back here. Okay. Let's go back right here. 415. Right. So we pushed past everything. A couple people knew about the calls. Somebody knew. They made a lot of money. Everyone else got killed right here. All these puts got washed out. Look how many more puts compared to calls. This expires today. Wait a second. No, this is correct. I want Friday expiration. So it's already technically Friday where I am. So you have to watch out for this kind of pattern. If you check the Thursday before, oftentimes this kind of pattern means that you will get a push. Now, could we get a pullback Friday with the numbers that come out? Maybe they're not good and pull back below this. We could. That's definitely something to consider. Let's look at what's going on in a couple of these markets. So look at the SPX. We have a 9 coming in on the daily here. How do I want to talk to you guys about this? I'm trying to think, because there's a lot of conflicting signals, and I hate it. But here's the big thing. Okay, so I'm not sure how many remember, but I made this indicator a long time ago to keep me honest. Because there were many times where I was irrationally bearish or irrationally bullish. And so I created this special background signal indicator to really keep me honest on what is truly going on with the market. So I'm going to move it up. Normally I keep it down below because it's just easier, but I think it'll be easier for you guys to see if I move it up to this pane. And you can see it's called Julian's background signal, trend signals. Let's see. I want to make these colors a little bit brighter just for the purpose of this exercise. Okay. So it triggered bullish here. It wouldn't have been here. It would be here after this close. So here on the 24th, it triggered bullish. And after that, the signal for me is don't short. Do not take shorts. So since then, I've been trying my best to not take any shorts. But you can see before the entire past year, all we had was red. Red. We didn't have any green since the top. Back literally the same time last year, January, a little bit earlier, obviously in the month, but January, it turned off after January 6th and went red the rest of the year. The rest of the year was just shorting, and you can see here in the bull run, it was all green. Obviously, there's periods where it's off. You can see here, right here, and the market had a pullback, and then we moved higher. Various periods like that. You had a few red ones, but not too much. So now finally we have a green signal, and you can also see here with RSI, right? You guys know how much I like RSI. We had a crossover right here. This if I was trading a daily RSI, this was my long right here. 4,000 at the 4,000 retest. Did I take that long? No, I didn't do it. Why? Because I'm still like feeling bearish. I don't know how to describe it. I don't know how to change that feeling. I have this, strange feeling of bearishness, which is exactly what the market wants. So maybe the minute I turn bullish, everyone else should short, just short, because maybe I'm a good counter trend signal. I'm sorry. Yeah, that's true, but I do appreciate that. The reason I'm frustrated with myself is because I do have a system, and my system tells me, I have like backups, for example, this turning green and this breakout. It's to tell me to turn bullish, but I can't do it. So, I'm frustrated because I'm not following my own trading system. You know what I mean? Yeah. So that's the big thing. Yes. Yeah, I didn't pull the trigger. So it's kind of an ironic thing, because here's me like struggling with my emotions, and I know the history and I know that this works, but I just don't follow it. So you know what, I actually thought about this earlier in the before I did the show. I was like, okay, tomorrow I'm gonna spend the whole day and I'm gonna go through like 10 stocks. And I'm gonna go do a daily time frame. I'm gonna do a 3-day time frame. I'm gonna look at RSI crosses, just to double, triple confirm to myself that when there is an RSI cross, I should take that signal when it's on a higher time frame. Okay, anything below a daily, the success rate massively drops off. Trust me, it drops off massively. But above a daily time frame, it can be very successful. So I'm going to do that just to help myself feel better about trusting my own system. So there you go. Psychology, a little bit of a trader sometimes. Okay, so the one thing I wanted to point out is that we have a 9 that's come in on the Tom DeMark. Oftentimes, 7, 8, and 9s conform with pullbacks. Now, they don't always result in pullbacks. They can result also in just pauses. However, in an extremely bullish environment like this, the best you can hope for is almost a pause. Like you can see here, back on in August, we had a 9 come in, and all we got was 1 day of pullback, and then we just rallied again. And we were at RSI 64. So now, currently, we're at RSI 70, and we've got a 9. So potential on the report tomorrow, we get something like this. We could get a pullback, right? Something like boop, and then we just go higher up to this big line I have here. This is my big line in the sand at 4,300. Okay, that's my next kind of resistance level that I'm a bit concerned about. So that's kind of what I'm thinking based on this 9, but it's not enough to take a position. I'm not going to take a short just because there's a TD9. There's too many other bullish indicators to totally jump in on the short side. We have to look at some potentially lower time frames, but what I do want to look at first is some higher time frame potential setups. So you have this, I would call this like an ABCD potential setup. You have this right here, which points to 43.50. I think there's a lot of liquidity up here that they could take out. Take out all the way the highs all the way back to May. I don't see why they wouldn't go after this area. I mean, if I was a market maker and I knew that the market was going to go down in the future, I would take out this zone up here. I bet there's a lot of short liquidity up here. Any shorts that are left, they would be up here. So a nice ABCD there. That's a possible target, and we're almost there. We moved. You can see how after this breakout and after my indicator went green, how quickly we moved. 3-day move all the way up to 4,200 almost. But before it was much slower. Let's go to a 3-day, and let's do a weekly and a 3-day quickly. So the weekly was one of my other like hopes if we stay, as far as bearishness, as I said, I wanted to be bearish. So if we stay below this VIP line, that is not a bearish sign for me. Or I'm sorry, it's not bullish for me. But we're starting to push above this VIP line. So if we close above it, then that is an especially bullish sign, and I could definitely see us push higher until we hit this wall, and then we'll see how things develop, and we could push even higher than that. So that's weekly. Let's look at a 3-day. So on a 3-day, where did I get my cross? So this was the initial downtrend, and this was kind of my trend line. So there was a fake out here. There are fake outs that happen, but this was the eventual breakout here. So this would have been your first long, then you would have done this, like that, and this is your exit right up here. You would have exited on 8 and 9. There's multiple criteria for exiting, but you could have started shorting after this breakdown, and then you would have, looked at this here, and you would have waited for another one to form, and then you get your W, and you would take longs over here. So if I was trading RSI, my signal to go long was October 19th. Okay, and then I wait for another development. Okay, here's my next one, and I wait for breakdown and a retest. So breakdown, retest is right here, and I would have shorted in this area. And now we broke down. I draw it again. Okay, there's my cross to go long. So you would have went long here. This is the one I'm definitely going to backtest tomorrow to see about, and I'll post the results. I'll post the results on our site. But I'm gonna test a bunch of stuff, especially with the 3-day. I think the 3-day has a lot of value. 2-day, 3-day, 4-day. I think a weekly is too slow. And you can see it's pushing higher. So I don't think I should get bearish or consider. Oops, that was not good. I don't believe I should get bearish or start. What is going on? Why do I not have my? Okay, I lost my RSI. There you go. Okay. I don't think I should consider any kind of bearishness, and I don't think anybody else should, until this 2 or 3-day RSI line breaks down. That's all you need to look at. When this breaks down, okay, consider short setups. Go to lower time frames. Do whatever you need to do. But you always need to have some kind of bias. So the bias, if I was following my true RSI strategy, should have been long once we crossed over right here in this area. January, the beginning of January, all here, this should have been the long bias. Okay, and then it got double confirmed here where you would double down, basically. But now it's personally, I think it's taken off quite a bit, and you really got to hunt on the lower time frames to get in on the long side. The entries, when you see these signals come in, you really have to enter quickly, because within a day or two, it's gone. It's already taken off, and you miss more than half the move. But that's what the market is supposed to do. Okay, if the market ever sits somewhere for a long time and it's easy for you to get into the trade, you know that you're probably in the wrong trade, and it's gonna reverse on you, and you are literally the exit liquidity. So you have to be careful. Anyway, 9 came in. Let's go to a little bit lower time frame. On these lower time frames, you can see I have my this was my Elliott wave that got totally destroyed and didn't work, so we're gonna delete that. Here's the retest right on the massive downtrend line. This was would have been a great entry right here. But you can see on these lower time frames, RSI is basically worthless. It's just it's totally worthless in this kind of insane market that we're in here. I can't even use it. Maybe on a 12-hour, like 12-hour, you got to break out, and you had some retests down here, but it's just not clear. So I would not recommend it for these lower time frames, other than to try to look for some divergence occasionally, like this 1 hour. There's nothing here. As long as this 1 hour is embedded up here, it's up only. As long as the daily looks the way it does, and then a 1 hour is sitting up here, all you need to know is it's up only. There's no pullbacks. You need the 1 hour to cross down below the VIP line first, and then the daily to follow. Before then, you can start like hunting and considering short setups. Until then, you're kind of just like churning your wheels and fighting. You're literally fighting upstream. That's what you're doing, and it's pure insanity. Okay, I think I kind of gave my viewpoint. So to summarize, on the S&P, we broke out this is super confirmation on this week, on Tuesday, not this week. What was it, January 21st, 31st? Where's January 31st? Oh yeah, this week. Okay, so Monday, Tuesday, retest, breakout. This was the long signal. Now we're hitting a 9. We've taken out this big supply zone area today. I would look for a pullback going into tomorrow and then a push like that higher. That's kind of what I'm looking at from an Elliott wave perspective. And this is just really quick. We could be getting something like this. Here's your 1, here's your 2, here's your 3 wave up to here. Here's your 4th wave pullback, and then your 5th wave is right like that. And then we go into some kind of oscillation where we either do an ABCD pullback, ABC zigzag pattern pullback, and then further up, or we completely fall over. That's kind of what I'm seeing on Elliott wave. I'll have to like mess with it a bit more, and then I'll post the chart. But this is kind of what I'm seeing, especially now that this bear trend has been broken. I don't know if the bear is 100% over, but I think that there's definitely argument for it at least the next couple days. We should be looking on the long side. Okay, so that's kind of my thoughts on the S&P. I'm gonna hand it over to Effie, 1075 on our site, to do a quick presentation on what he thinks about the S&P, and then we're gonna jump into stocks, and I'll do the rest of my little regular presentation. So Chris, can you switch over? Effie, are you ready? Okay. Okay, yes, it's muted. So let me unmute that. Try talking, Effie. Let's see if it comes through.
Testing.
Oh, yes, it comes through. Okay. I'm gonna make myself disappear right there. Okay, and we should be able to switch to your screen. I'm gonna stop screen sharing. We're gonna. Okay, let me bring it over. I'm trying to bring it over. View options. All right, wait 1 second, guys. Okay. All right. I think you're good. I just need to. I want to get rid of the controls. How do I get rid of these controls? Chris, how do I hide the controls?
The controls should hide themselves.
Maybe they'll just hide themselves. I'll stop moving.
You should have 2 screens, to be honest with you. One
I have 2 screens.
Presentation. The 2 in Zoom specifically. Because one should be about your controls and everybody that you can see here in the meeting, and then the other one should be just the presentation. But if that's not the case, maybe we should play with it right now.
Okay. Yeah, let's just go. It's okay.
Yeah.
All right.
So hello everyone. Unfortunately, I have a nickname on the site, 1075, because basically, when I was first registering, I was registering through my company, and I sold the company, so I lost all the emails. So I need to create these multiple accounts to survive. But my original name, when my parents gave me, it's Efe, and I'm an architect from Istanbul. Just to give a brief summary, and I've been with the TRA for I think almost 2 years now, and I try to learn, keep up, and I try to approach, kind of create my own understanding of the market, and I will try to share with you what's going through, what's I see, and what I like to do when I design something. I like to put everything together on a whiteboard, throw everything, kind of try to combine relationships and confidences on songs. And but the hard part about this market state, as far as I see, like Mr. Druckenmeier says, that it is flat or very choppy, and this is really hard, because and also I feel sorry that because we missed a good opportunity before getting the market earlier, and having up only for years. Now, basically, I think in this market state, it requires you to be nimble, which I think, to be honest, Julian's strategy is great for like changing positions and being able to short or long depending on the market state. Not everyone can do it. But why is this? Why is this the flat or choppiness for an entire decade? And he's a very famous investor. Why this is happening? And also, Michael Burry says that he sometimes comes up online his Twitter, sometimes he doesn't. Is a bullwhip effect theory, like the price oscillating with the inflation as well. So there is some, it's like it's like a traffic, you know, there is so many cars moving at the same time, but if one car hits a brake, then all of them has to brake very fast. Then the road is empty, the car goes faster, then everyone needs to speed up to reach. But it creates these bottlenecks and these pivotal points. And so in order to kind of create a strategy for this kind of a state, I tried to look back and see what we can derive from the past, which is the easiest way to be able to understand. And that's usually inspired by Brian, actually, because he's talk about his old experiences and especially the 90s and 70s, where we had inflation era again. So what I tried to do, basically kind of simplify it. Okay, I said, okay, I'll go back in time and try to see what happened in certain states where we had high inflation and what happens if we have the high inflation rate. And this is the 1942, which is also magically the same as 2022. So what really happens is that you see the inflation peak and the stock market bottoms around that area, and you have this kind of grace period where the inflation comes down, and this kind of encourages people, creates a good economical environment, because when you think that the prices are coming down and inflation is coming down and people were like already suffering for the prices going up, and everyone was like, okay, like everything is going up, I should buy a car, and they keep buying the cars, buying the Teslas, and eventually when the prices go down, like a Tesla cuts price or the companies cut price, you are waiting to buy a house and the mortgage rate keeps dropping and you want to be involved, you want to buy it. So you hold on to your cash at the first stages and you wait for like an opportunity to jump back and buy the house, buy the car, whatever the thing that you wanted to buy. So this is eventually, it's at some point the demand rises again, and the people who has not really lost money or they were early to get out, they were waiting on cash, which, you know, in the market they said, like last week's, I remember reading that there is 5 trillion cash is waiting on the sidelines to jump back. And also same with the crypto markets, there is so much stable coins waiting to jump back to market because everyone is just waiting for the dip to buy back, and it creates this kind of a buzzwhip effect where like inflation comes down and then it again starts to rise up with the demand coming back, and then Fed has to raise the interest rate again, and this kind of takes like 2 years, and after the peak there is another eventually around 2 years, like end of this year, then if we think that the 2022 was the peak, end of 2023 seems like a good point, right? Like, okay, it should be the point we should be careful. And when you go to the 70s, and this is the gold, let me close the gold and the interest rates, and you kind of see the nearly exact pattern again. Actually, you see that inflation starts peaking and while the S&P is like bottoming out, and it again takes around 2 years approximately uh, to around those years, and then you have the inflation revive again, and it takes like 4 years to clean it out of the system where it can peak again and drops. So when we embed this thinking into what happened with us is that you can see that inflation. I remember reading the lots of uh, economical writings or discussions if the inflation peaked or not, and because everyone now they know there's both previous cycles, so people are like, okay, waiting to buy the dip, right? Basically, and they bought the dip here with the inflation peaking, and they got punished. Like the market punished them for like one last time in September. Like they said, okay, this is not not gonna have it. So I think there is now like a little bit front running going on, and there is some change in the market. Well, this is not really 100% correlated, but we can kind of see that this is kind of works because the inflation is coming down now, and the S&P is in a creating this head and shoulders kind of pattern. And I remember one gentleman from the site recommended this other economical guy, and Brian talked about him, what could happen. And his stance is similar to this as well. Let me go through it. Just a second. Yeah. This been, I think, last week, where you can see that this guy's theory is a little bit extreme, but basically there is an era where you see that the market rally is very fast, and it even breaks all-time highs here. In that period where everyone was holding on to cash and they were waiting and eager to jump back to market, buy stocks, buy cars, so they push the market up, and then this creates an inflation, and then you get the big crash because now this is the maximum pain you can inflict upon the market, and everyone has bought. Now they don't have any cash waiting on the sideline, and there is inflation, so there is no buying going on, and it is a really steep decrease of the market value. I don't know if this is gonna happen, if we're gonna break a ball off top, but like if this happens, if that W on the cows works, and on the S&P now we see it kind of targets an all-time high, and I'll show it to you in a second. This is one theory, so I like to combine different things. This is from Larry Williams, and this is his 60-year cycle. And he kind of sees a grace period as well, where this is maybe the last chance for the bulls to make some money, and or the crypto make some money. And also I know that Cole's astrological pattern also signals 25 to 26 years for really the top of the market. But basically he sees a down year a little bit longer, end of 2023. And also when you look at general decade cycle shape of the GAN, you can see that at 2027 maybe, and 2029, 2010, where the market really hits that big crash, that also confluences with this one as well. So all of these kind of show the same pattern, that okay, we get a nice rally around these years, maybe stalled, and these big crashes happens. But of course these are the moves, not exact moves, but kind of like the magnitude of them. And foundation of cycle guys, they kind of see the market bottom around this June area in their modeling. But From what I like, the software they use is great interface, but it has somewhat, as far as I understand, limited data points, so they cannot really compile lots of data. So I always approach with their analysis a bit. It's more accurate in short term, as far as I can understand. So all of these things, kind of this Basso effect and the market being hard, kind of make me open to idea that maybe things could be more bullish than bearish. Because we have a very negative sentiment. Okay, the sentiment is negative, but eventually there is lots of cash waiting on the sidelines, and that kind of creates these effects if you green light it. Because like even the yesterday's Jay Powell speech, if you had a chance to listen it, like he tries to say that okay, I'm gonna increase the interest rates, and he's saying it, but the market is like rallying, because market just wants to hear that it's done. Like, are you gonna pause it? Did you talk about pausing? People are eager to buy. And also thanks to Zachman and Brian again, this yearly first quarter year analysis, it showed that there is a huge selling off in the recession names. So like the big boys, they are selling the recession names, and there is big economists, traders, investors, they are saying that we are gonna have a choppy year. So I think this creates a nice maximum pain scenario for everyone. Like, because also with crypto, like everyone is waiting for 10K, 5K, 3K, which I also believe will happen at some point, because basically we are having a very huge time period where there is literally something that never crypto experienced. So we should go lower than 75%, I understand, but this is a good time to really wreck the bears and take their money away and make them accept that, okay, I accept this was the bottom, it's going up, then maybe crash down. It's the maximum pain scenario. Also, even though Larry Williams kind of sees a a forecast on Bitcoin that it cannot have a nice rally up to March area, maybe he sees a bottom around April, but it's uphill states. So with all these things involved, how I applied it to my strategy. What I have first the crypto market and gold. So also the gold is a huge topic as well for me, because basically when you look at this analysis, I'm sorry, and if you open the gold, you can see that it's really goodly correlated with inflation. Like inflation comes down, the gold comes down, inflation goes up, the gold goes up. Also with the, I know that Brian likes to talk about it with the show with Stefan as well, that this period where the gold really does a huge move with the second leg of the inflation. So what I'm trying to do actually now, I'm trying to create a forecast for myself, try to time when to buy really gold. So try to capture that move. We don't have, I think, good data at this point, but what is also different in this time, so to say it this way, but this big rally in the gold, which also, I'm thinking there is some front running or some manipulation to really make people suffer from the gold. Now everyone talks about the gold. There is so many YouTube videos that how great is gold. I was lucky to buy around bottom levels, and I sold it I think a few days ago because I was buying thinking that it will continue to go down, and I kind of spread it out. But once it rallied so fast, I had to stop. But and I find it hard to believe, but there is also reasons for that as well, which is macro reasons, more political reasons. Now central banks, they are trying to create these talks. There is a talks about Russia and China. They are trying to create a gold-backed coin, gold-backed stable coin, or the Saudi Arabia. They are trying to sell the oil with yuan to Chinese people. So there is a talk about how China will create this inflation war towards USA, and it's gonna just push the inflation higher, and gonna corner Federal Reserve to interest rate higher and kind of corner it down. And because the euros and the USDs of the banks has been weaponized against Russia, so there is now, they were already preparing for it for some, I think for last 10 years or so. Russian central bank has been selling USD, and they are stockpiling dollars. But also USA is the biggest owner of gold, so I don't know how real is it. But basically there is this as well. Maybe that's one of the drivers of the gold price. Also because of that, I'm trying to position in that. So what I did is that I went back and go through that Dow Jones inflation and gold period charts, and I tried to create a forecast how much time it took for these peaks to bottom out, or the market to bottom out, approximately giving me some dates, which these are just days to watch for. It's not because they are gonna happen, but it makes you to keep the possibility in your head alive. So I find it's plausible that maybe by 2024 May we might have now a big bull rally, and then we might have to really start coming down, maybe to a bad CPI data or some bad core CPE data that's coming along, and if the reality sets in the market now, everybody spent their money and they are inside the market, they pushed everything higher, they bought higher thinking that this will go up for 10 years more, and then they have no cash to buy back any drawdowns, and we had the real capitulation, which also be nice maximum pain scenario for the crypto people, because the crypto has been always like breaking its all-time highs, so nobody nearly thinks that it's not gonna break its all-time highs. Even when I sell it to some of my investor friends, they are like looking at me like crazy eyes. Are you like crazy? It's like 100% certainty for some folks. So I'm thinking it could be a nice maximum pain scenario. So what I kind of see through going through this summer, that we will have this rally to really a mini rally on Bitcoin and S&P to make everyone through May kind of get excited, get in the market through this choppiness, and then maybe we have a little bit sideways and downward section through the no fall, and then we have one final push while the inflation is bottoming. I kind of did this forecast going through the previous cycles and calculating the time distance from peaks and bottoms, but this is just an estimate, doesn't mean much by itself. What really got me to crypto, because I have now a very big position now compared to my portfolio, that I've been buying anything under, it was 20 all throughout this bottoming process, when we started to have first divergences, and I had a rule to buy it under 20, so I kept buying as long as it's under 20, and luckily I was hedged through this FTX dump, even though knowing, I can't short it here, like I can never, it's because it's like crypto never had a good rally, So I wanted to short it, but it never gave me a chance to short. I shorted around here. It was a good short to here, but after this, it never rallied, so I couldn't. So I was DCAing, and luckily I was hedged here thanks to calls, astrological charts, and blood moon time. And here it was like three week divergences, and there is also a time capitulation. And also when you use pip-based time zone studies, they usually coincides with the previous cycles in this area. But honestly, I was expecting this move through the March, not now. So it was kind of took me by surprise. So that's why I think there is some front running going on. Things move ahead fast, and it's really hard to get on board after the things really changed. But I just couldn't ignore, because I kind of like this sign. So I was like, okay, I have to get in and finish my buying pace, and just watch, and I can just sell it after it, even if it comes back to now my medium average, it comes to that number, I can just sell and leave the market and wait for a better opportunity. And now on the, this is like a very basic, we've been lots of talking about these daily briefs, what's might happen. This is two previous cycles, and usually when you have a huge move down, you get a reaction very fast, which happened previously, and this GAN target seems very reasonable. Also, they coincide nicely with some chaos targets as well. And timeline for me for these periods is like May. So also because it's a fifth time zone area for me, also this coincides with Cole's astrological forecast. And before June, no matter where the position is, I plan to liquidate, because you know now the market state is, as far as I can see, is very hard. So I like to just exit wherever I can, and maybe it will just chop around here and we will crash from here, which is very plausible. But this is a very strong move, so hard to say. But we can see that we have daily divergences coming along, and we hit some chaos targets. So it's very plausible. We ended around these areas where Julian also said 25, 26. But we'll see what will happen. And for S&P, let me go to that as well, just give my 2 cents. Yeah, it's very crooked, and I don't know, like this chaos, if it works, kind of matches with this blow off top kind of thing, and gives us an all-time high. I don't know, it's hard to believe, but now everyone there and their father, mother, sister, they were looking at 200-day moving average, and we are above it. We should retest it, which will be very good for the bulls. If there is a retest, that will give some confidence, and I can see this like people spending and stampeding upon to enter the market to target blow off top, or maybe we get this, which is more likable scenario in my case. I'm not positioned in S&P. I have a few ideas. I have like few positions. I had a nice Tesla long call, which I closed, which was a good trade, but I closed it a few days ago. And I followed Zachman through his communications trade, which is working out very good. And not many big positions, because I like to get in around fall, while I see this year how it goes, or like maybe by March, I kind of expect a pullback around those two areas. Depends on some cycle analysis. So since I missed this move on the S&P, I'm just waiting on the sidelines now. You can like it can be entered. I understand it's a good risk reward ratio, but I already have a big position on crypto, so I like to first liquidate that. Then I will look for these markets. And this is basically it. I don't know if it's any help to anyone, but this is kind of like my narrative, understanding why we have this choppedness and why there is so much change up and downs in the market, and I try to position towards that.
So Fa, would you say that you're kind of exiting your positions now? It sounds like
Yeah,
you're taking profits on a lot of names.
yeah. Like on crypto, I kind of try to set up a DCA plan, and
Mm-hmm.
whenever I see that people are buying and I see lots of longs,
Mm-hmm.
I try to liquidate because you never know. But still, the maximum pain seems like, especially these areas like this. I don't see the market gonna give up 26, 25. They are
Yeah,
not gonna
that's.
leave these boys alone.
Mm-hmm.
It's so much free money for them. And here it dries out 40,000 levels.
Yeah.
So it's a plausible target for them to get all these guys, then get these guys,
Yeah.
which are like 14, 13, 12. Like these are the already the real nice technical targets. 9,000, the CME gap makes a
Mm-hmm.
lot of sense.
Yeah. I mean, that's what my chaos levels do line up with that. I'm targeting around 25,000, a bit higher.
Yeah,
And then we'll reevaluate once we're there, but that's definitely where I'm targeting. It would take out the highs from August, and it lines up with
yeah,
what you're showing on the liquidity map, which is what I also
yeah,
try to remind people that the market is about liquidity and taking as much liquidity as possible from people. For the normal stocks, so since it seems like you are still bullish, but you're exiting your longs, are you looking to basically you're looking for pullbacks then to buy again, or what's
yeah.
kind of
By
your.
by Yeah, why the reason is that I'm exiting the longs because they hit max target actually, especially
Mm-hmm.
on Tesla. I didn't close the XLC.
Mm-hmm.
Let me show it to you. Close.
Did you see Facebook's up 26% today?
Yeah,
Massive
it's
gap
crazy.
created.
Yeah, it's crazy. And also it helps the XLC as a lot. I had a short on actually Facebook, but I closed it after I seen the after 2 weeks of the January, and I
Mm-hmm.
seen the analysis, and I see that
Mm-hmm.
the recession names getting sold and the communication and discretionary rising. I said, oh,
Mm-hmm.
well, I should take a punishment here and just accept the loss. So I lost money over there. And this is one name that's very close to me, closing XLC. And I have the Intel, which is like, we'll see how it goes. It's trying to W, but now since they are managed to again get so bad earnings,
Mm-hmm.
that's crazy. I don't know. Like they cut the salaries of the CEO, the workers. Now they
Mm-hmm.
are if they now this is the now new norm. Like you fire people, and your stock gets like 10% move in a day. So maybe they
Yeah,
were
well,
like
it lowers
unfortunately.
their cost basis, and that's
Yeah,
all
yeah,
the market cares about is
yeah.
what is
Well,
your spending compared to your profit, and if your profit
yeah,
is down, maybe 20%, but then you cut your spending down by 30%, then I think it makes sense that the market would rally, the stock would rally, especially if they're doing buybacks. I heard that the reason Facebook is rallying so much, I think I read earlier today, is because they announced a massive. Not only did they cut a lot of employees, they also
yeah.
announced a
40 billions.
massive buyback.
Yeah.
Yeah,
Yeah, 40 billions. That's crazy.
that's what the
Like,
market loves to
they
hear
fire.
that.
Yeah, it was like the Microsoft as well. They fired people and they had a private concert from Sting for 26 CEOs, C-level executives,
Mm-hmm.
like in the Davos. Like this is how capitalism, unfortunately. But market loves that really.
Yeah,
I had a short. I took the damage and I exited it. But luckily I did.
yeah.
They would be worthless. I bought yesterday this gas play. I think Yuga. Yeah, it's up a little, and I think I bought it here. I had an alarm.
I see you have a 7
It's a
coming
seasonal
down
play.
on a daily.
Yeah,
It looks
yeah,
decent to
and
me.
it's yeah, in an ABCD pattern and a seasonal play for me. That's kind of coincides with this range. It can make a move, and yeah, I think that it will go up, but also there is in cycle wise, usually 60-day cycles, and it kind of shows that by March, February to March, we will get a pullback on S&P. So I think this kind of confirms the bullishness up to 2024, but I just want to be in a better position to buy. Not now when the market and like you said, anytime it feels like it's gonna have a pullback. So I'm just gonna wait for that, like a few months. I think it will give a better opportunity to enter.
Yeah, I mean, if you entered
side.
a lot of these stocks and names in crypto, like even just if you entered a month ago, it makes sense
Yeah.
to start taking a lot of profits up here the past couple days
Yeah.
with everything popping off, and not necessarily consider shorts, but consider waiting for a pullback. So
Yeah.
I totally am in agreement with you. Congratulations on your trades. Sounds like you did
No.
really well.
No.
What
Yeah,
is,
thanks to you
I've
guys.
got two questions. In the short term, what's your opinion on gold? You said you exited gold. So
Yeah.
where are you looking to re-enter? Because for me, I'm thinking, take out all the liquidity up below 1900 and then maybe
Yeah.
possibly continue the uptrend. But I could see it breaking down
Yeah.
more at the same time. So I'm curious what
Yeah.
your thoughts
It
are.
is. Yeah, I was expecting to be like FOMC to break gold, and I was expecting them to be like a little bit strengthen the dollars because dollar is going down like very bad. It's just
Yeah.
losing value, and I was surprised to see it. And apparently, I think it was a trap, right? They just
Yeah, big trap.
big trap, unfortunately. Yeah, I was lucky. I exited before, but so my target is actually always being around this area,
Oh,
like this
wow.
chaos level. And it seems an in ABCD move and it coincides nice with these lows. Kind of makes sense for me. And but I started buying here thinking that okay, it will go down here, but you never know. So I wanted to spread it out. Also, it was a big position. So and also it's company's portfolio. I just want to be not just it's not a trade, it's like the investment for that long inflation period. But when this rally happens, you have to exit and take profit. I don't know. So it's like 20% on gold. That's too much. But I'm thinking like we might get this. Also, but on code report, you don't see the change. So I don't know. Maybe we'll go higher. Maybe it was a better idea to sell. Like I can see that. Just a second.
Yeah, for me, the weekly chart is still quite bullish. That's
Yeah.
the issue. I do see pullbacks on lower time frames, but right now I'm only targeting a pullback to the around 1875 area.
Yeah. I might start to buy back those areas, like even 1850, 1750. Those are like good areas as well. Maybe we'll get lucky and get that. I might, but this is a long-term position. It's not trading, so I'll just buy and see. But the problem is that if the inflation is coming down, gold should trend lower. So it feels like I'm fighting the trend. I should just, accept that, wait a little bit more patient. But trade-wise, yeah, it's like it looks very strong, which what worries me is the retail now increasing their positions, and they're getting long.
Yeah.
But also you can see that there is no change in commercials. So maybe like in silver we got this reset, but the gold we didn't. So this was like front running. That's why I was surprised. But this is still a good area. Like if we get this much lucky, yeah. But on the short while, yeah, I agree.
And what about US dollar DXY? What do you think in the next, like, let's say in the next 2 weeks to 1 month? because I mean,
Yeah.
it broke down from that massive uptrend.
Which is crazy. Like I wasn't expecting this because I was expecting at least a pump like to these levels. And then the kind like we have so many divergences. There was this channel,
Yeah.
and I'm really surprised that they didn't do it. Today it's kind of showing some strength. Maybe this is a fake out, and they will just punish people now. But this is the target after 2.618, this 96.
Mm-hmm.
It seems reasonable area.
Yeah. I also have that
And
area.
there is one trader who does this 3D cycles on Dixie, and he says this was a three-year cycle top. So
Mhm.
he sees it going much lower actually in the long run, in the long term. And if the rates come down, eventually, if this is the talk of the town, it should come down. So
Yeah. That would
it's
certainly
hard to
be
be positioned.
max pain for most people, because if we think about retail majority moved into dollars and are being encouraged to
Yeah,
hold dollars now. 4% interest rate on their savings. So how do we double fleece them? Okay, rally the market, rally stocks, rally everything else, and destroy the value of the dollar.
yeah,
That's
it's a
that's how you
perfect
double
storm.
screw them.
Yeah, perfect
So
storm. I
I could not
totally agree.
imagine being someone who's not watching the markets. They're just general public's just getting screwed here, including
Yeah,
being in 9 to 5 jobs that probably don't keep up with inflation. That's another
yeah,
issue.
yeah. It's crazy. Even in my country, it's crazy. I don't
Yeah,
know. Like it's very hard times. You really need to be defending your buying power,
yeah.
and you should learn and work on this stuff.
Well,
Otherwise, you work for the
that's why we keep seeing bigger and bigger separation between the haves and the have-nots.
yeah,
It just keeps
yeah,
growing.
yeah, yeah. Unfortunately,
Yeah.
I'm long on oil, which is not working out really well. But I was short, and I just switched it by the start of the quarter as well. And I hit few targets, but I don't know. Like it's also strange where the dollar goes down and the gold goes up and the oil don't. Like
I think a long on oil
uh,
makes sense here. To me, it makes sense. We're on
yeah,
the other side of the
yeah,
downtrend line. You've got a 7
yeah,
TD coming in on the daily chart. You've got on the 12 hour, you're on a 9. You've got a 9 on the 12 hour and a W forming on RSI. I think this is
yeah,
the perfect area. This is where I would take a long on oil in this area, and I would just set my stop right below the lows at like
yeah,
74 a barrel.
yeah,
I think it's a great area. I would
yeah,
I would
yeah,
I would be perfectly happy with this. I mean, you can bounce and W out and take off. I'm gonna delete my wave count I had for my bearish views of oil. That didn't work out. Everything kind of got invalidated for me because the U.S. dollar Dixie or DXY didn't bounce like I expected. So
yeah. Actually,
everything got invalidated. If DXY had
yeah,
bounced, then the market would have rolled over. I don't think stocks
yeah,
would have taken off. Gold wouldn't have rallied like crazy, but instead it
yeah,
just dumped. So that was the
yeah.
big reflection point for me. Something I want to share. Do you have anything else you want to share? Otherwise, we'll switch
No,
back to
no,
my
no.
stream quickly.
Sure, of
Okay,
course.
awesome.
And
Thank you so much for the presentation. Everyone on YouTube is
no, no.
saying hashtag value. They love your charts.
That's
I think that was an
great.
awesome presentation. What
Oh,
do you
thank
guys
you very much.
think? Should we have FA come on more regularly? Maybe once a month or something like that, if he's open to it.
Yeah, sure. If I can add value, of course.
I think that was fantastic. I really liked
Yeah,
the long-term studies, and I think it would be a lot of fun to follow up with you in a month's time. I mean, I know you're
yeah,
very active in the lounge, and that's kind of,
yeah.
and
I
I always
try.
enjoy reading your calls. So I thought,
Yeah,
why not have you on the show?
sure.
Love to
It
get
was
your
really
insight.
fun. I like to. I'm honored.
Yeah,
Thank you very
it
much.
was a great. I was so shocked when you pulled up that whole like macro chart. Wait, I'm gonna switch the screen back to me so you guys can
Yeah,
see
I'm
my
trying to
beautiful face here. Hello, here I am. I'm still here. And we're going to switch back to my charts. We're going to close with a couple little thoughts, but I just wanted to say it was great to have you on the show. Really appreciated your insight. I think we'll definitely do that again. I love your posts
Sure,
in the lounge. Hopefully by the time we have you on the show next time, we'll be on Discord. We're moving to
Yeah.
Discord. I've got all the channels set up, everything. I'm actually I've got a Discord expert reviewing everything for Discord, but then I'm going to give the general channels that we have planned out to our instructors to look at. So that means like Grim out there and you, Josh, to get your feedback on the channels and see what you think, and then we'll implement them. And by then, hopefully Sjorn will have a lot of the code done for us to move over. And maybe in about a month or so, we'll be on Discord, and then we'll be doing everything from Discord. So that should be a lot of fun. The one thing I know we're running late today. We're running late. The one thing I wanted to point out is I made this little chart. I posted it in the lounge, but I wanted to talk about it. Is a weekly of Dixie.
Effie, if you can unshare your screen and then
Sure.
if you can share yours here, that'd be great.
Okay.
Because Zoom is stuck, I'm just gonna close the Zoom and I'll rejoin. Sorry for the problem, guys.
Oh, you did a great job.
Oh, no
All
worries.
right, I'm sharing mine, but I think it should be fine. I think YouTube looks good. I can see myself on YouTube. I'm kind of watching that. Hello, YouTube. Okay. So this is a weekly chart of the Dixie. And I went through and I looked at when was there actually a reversal based on Tom DeMark signals on a weekly time frame. And what I saw was that it correctly predicted a pause or reversal 78% of the time going back to 2015. So 7 out of 9 times it was correct. So we have a 7 coming in here. The dollar can push down a little bit lower into that 8 and 9. But we could possibly be setting up for, at least this is slowing. There should be some kind of pause. Or if it's like basically the past 80% of the time, we should get some kind of reversal. You can see here, reversal, 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 at least for a couple weeks. Keep in mind, this is a weekly chart. Here, this one time, we did eventually get a reversal, which was higher than the initial signal. But we had a month of further down first before then it went higher. But you can see other here. So the 7 came in, it dumped, 8, 9, and then reversal and push higher. 7 here, reversal, push higher. 7 and 8, huge reversal, and then an oscillation. So that's just something I wanted to show because I'm trying to see, like, how often did this signal actually work? And it worked the majority of the time, but you can see last time it came in right here, it didn't work. That's how screwy this market is. Something that, like, if it wasn't for this failure, if I went back, it had a greater success than 80%. It was higher than 80%. Now it's lower than 80% because here it didn't work. 2022, nothing worked, and it's probably not going to work in 2023 either. So I mean, we'll see. I just wanted to point it out that this came in, didn't work at all. We didn't even pause. I can't even consider this a pause. We just rolled over and continued lower, and I'm pissed about this because it screwed a lot of my calls. I really expected a reversal here, and it didn't happen. We were even at the midpoint of this uptrend of the US dollar. So you can see I have this huge uptrend, parallel channel, that's been well respected, this midpoint. And normally there's some type of pause at the midpoint, and we did have a little bit of a pause, but then it just went straight through instead of, having a bit of a bounce. You can see last time on the way up, it went through and then pulled back and then continued higher. This time we got like 2 days of push to take out any shorts before it continued lower. Yes, that is true, Josh. Maybe there's been some fundamental hand grenades that have been thrown to kind of mess this up. I guess the big thing is inflation coming down and the Fed slowing the pace that they're raising rates would be extremely bearish for the dollar, so that makes sense. Gold really took off here. I wanted to touch base on gold. Yeah, by took off, I mean it dumped. This is my 12-hour chart. You can see this divergence, major divergence here, and breakdown like this. So I do expect a bit of a lower continuation with gold down into this zone. I am short. I took a short all the way up here. Actually, I took a short here, got stopped out, and I had to take another short, and I didn't get stopped out in the second one. So I'm in that short. I expect I'm going to start taking profits down here. I don't see why they should at least take out these lows, go after this liquidity. There's probably a lot down here for longs. Take that out, and then we're going to reassess to see where it goes. Because if the US dollar is going to continue down, gold should theoretically continue higher. Okay, so that's gold. I'm going to just touch, well, first look at Meta. Ridiculous. Look at this huge gap. Oh my God. This is going to have to get filled at some point. And look at my RSI chart. We are oversold on, I don't think I've ever seen something like this. We're oversold on every single time frame except the weekly. This stocks are trading like shitcoins. Seriously. I don't think I've ever seen like a stock this big up this much. I think if you look at the earnings report from Facebook and their guidance and what they did, you would quickly realize that working for a company is not necessarily a secure job. You just get cut. You can just get cut, fired, and yet the company you're working for, the stock goes up crazily and the company makes a ton more money. So the company oftentimes doesn't care about you as a person. If it's a public company, okay? If it's a private company, I think it's totally different. But if it's a public company, you have to be very careful. And you're not as secure of a position as you may think you are. So just keep that in mind. Okay, let's look at coin. Somebody said that's taking off. I haven't even looked at it. Holy shit. Wow. So coin is up from the bottom only a couple days ago. What is this? This is seriously like shitcoin. I mean, coin is shitcoin. So we were at $34 was the bottom. So where are we? If you bought this bottom, you are now up 140%. Insane. Who would think that stocks could move this quickly? But here was your breakout, right? So you could have just drawn a line like this. There was your breakout. There's your long. The minute we closed up here, you would have went long from 50. So you're still up like 40%. Maybe it's not a huge double, but you're up a good amount. Let's look at my 3-day analysis, right? That I've been talking about, that I want to do a study on. Boom. Wednesday was my confirmation right here. That would have been my confirm. Here, you're not yet. This is your confirm. So let's say we get in around $45 to $50. And what would our profit have been? All right, so right now we'd be up 75%. That's assuming we just took a spot position. 75%. Oh my God. I hate myself seeing these because it's so obvious, so simple. So simple. And I've done this before where I've been too bearish and then missed these moves. I feel like I could probably go back and see videos from like a year ago, 2 years ago, where I missed RSI breakout moves. It's kind of funny to look at this and reflect on it. And you can even see last time this happened, right here, 3-day breakout. You would have taken the trade here. Even then, you caught a move. This was a double. And then you would have just done like this. And then your exit is here. Right, so $80. You would have set stops up here, though, and you probably would have been stopped out. That's when I usually like to go to a daily lower time frame and kind of set my stops. But wow, look at this move. This looks... I just think it's too much, though. I really do. This has to be some type of capitulation event, but in the other direction. You can see, look what happened last time. This kind of exact same thing happened here, right? In August. Things took off. So here's accumulation, right? I didn't mean for this to go this long. Here's your accumulation. Here's the move, okay? And then here's your distribution. And then we just go back down. Some kind of fly here. So likely this was the big move right here. Maybe you get a little bit higher and then we sit here for a while and we distribute and then we pull back and then we go up. That's what I potentially see happening, to copy kind of what's happened in the past. I mean, if you look at this 4 hour, right, we're actually on the other side. Let me close my Discord. Is popping up with all this random stuff. Quit Discord. Okay. Keep Discord up because we're moving to Discord. So TRI is also on Discord. At least we're talking there internally as a team. Sorry for that interruption. So this is, be careful FOMOing into these names here. The moves already happened. Entry was back here. Now we have to wait for distribution and pull back to get into these longs, unfortunately. Assuming we stay long. All right, so that's coin. Let's look at Bitcoin really fast. I mean, I think FA did a great job touching on Bitcoin, and I totally agree with his thoughts. If you look at a 4-hour chart here, look at this divergence, but look at how it's trying to break out. We do have a 7 coming in, massive divergence all over the place, but there's that liquidity, and I can't see them not getting that liquidity. So when daily chart is embedded like this, the RSI, oftentimes, regardless of what happens on these lower time frames, the lower time frames are just used to confuse you and stop you out. And eventually they reverse and they move higher. And I think that's what's going to happen here until we hit that liquidity, at least up in this 25,000 area. So tag liquidity in the 25,000 area, maybe a bit higher, go up here, 25,500, and then we can reassess and maybe we might roll over. There's definitely distribution going on the way up. This was accumulation, impulse move, and then this is your distribution kind of happening here. So maybe we do something like this here, right, like that, right, like this, and we just stay in this range up here until eventually we do that, and then you can get long. Maybe your long is like this. Let's say we stop up here, 25. Oops. Let's do a fib right here in this range, go all the way to the lows. So then you're long, yeah, right here, 61, between 61.8 and 88.6. This is your long area on the pullback, assuming we get one. Okay, I think that was a great show. I really appreciate, again, FE coming on. I think I don't really have anything else to say. I think let's see what happens the rest of the week. Careful getting too euphoric. I think the fear greed index is starting to hit the greedy area already, so be very careful out there. Did someone say something on YouTube? Oh, 1 June said, is January barometer telling us that we're going to bull the whole year? We are having I think TRI is having a blog post come out about the January barometer. I would definitely check that out. I'm not sure if it got published yet. Let me check something. I remember we were having some trouble with that, but I would refer to that. Let's check our blog. So here's the TRI blog, by the way, for anyone that hasn't seen it. So the last one we published, yeah, including January barometer, Wyckoff pattern. So yeah, it was published. 7 studies that forecast the bottom in 2023 stock market, including January barometer, Wyckoff, Banner cycle, and more. So Josh did a great job making this, along with Brian reviewing it. I would definitely check out this blog article if you haven't already. I'm not going to go through it on the show, but I would check it out. Really a lot of great information in here. You can see contents in this post. We'll look at a few studies that give us forecasts for the year. Go through that. I'll post it in the lounge as well. I need Doge to go 100x. Joshua, you're so funny. Okay, so check out the blog. Don't worry too much if you miss this move. Hopefully you didn't get caught too hard on the short side. I will report back sometime next week with my study results on the RSI with the 3-day and daily crossover moves. Maybe we'll even do some kind of portfolio on that. I think that would be great. Message 1075 and thank him if you're on the site. You know, I think he did a fantastic job again with his presentation. I think, that's about it. I'm trying to think what else can I say, but I think that's about it. Hope you guys have a great weekend. Don't spend too much time on the computer, as always. Lift those weights, and I will see you on the site. And if not, next Thursday. All right. Bye, everybody. Have a great day. Oh, I have to end the stream myself. I'm doing it this time. Okay, let me stop streaming. How do I do that?